Hello and welcome to another Software and Internet Monthly Market Report brought to you by Stanford Advisors. May was a really busy month again, especially in terms of the number of dollars that were deployed into M&A in the software space. $100 billion invested in the month, which must be a record. And that's really made up of several transactions, especially VMware, which was acquired by Broadcom for $61 billion. Black Knight also was a big transaction that was acquired by Intercontinental for $13 billion, and Zignia was acquired by Take-Two Interactive for $12.7 billion. So lots of activity. All these transactions on this page are multi-billion-dollar deals, which just kind of shows how large some of the deals were this month. Interestingly enough, the average multiple across all deals was 4.8 times, so that's kind of seemed to kind of regulate a little bit. Lots of spread here, obviously, in terms of the transactions here. You know, the first one, 4.8, Black Knight at 8.6, Zignia at 4.2, Aspen for 15.3. So lots of variability, but the average for the month, interestingly enough, was 4.8 times. If you look at overall kind of dollar volume, you know, that's really grown this chart. So already for 2022, we've done more transaction volume than all of 2021, which was already a huge record. So it just kind of shows where we are and where we're headed. Interestingly enough, though, on the flip side of that is the number of transactions are down from the peak in 2021. So annualized right now, they'll be down about 10% from last year's rate of number of transactions. In terms of the spread of valuations that we look at a lot, you can kind of see that here, normalizing definitely in the second quarter, with the spread, the 25th percentile being at 4.2 times and the 75th percentile at 8.1 times. And the median is down, as we kind of said, for the second quarter. So valuations have definitely started to normalize a little bit. But really what we're seeing is it's the 75th percentile that's getting impacted the most. Those transactions that were happening at 20, 30, 40 times are becoming a lot less common than they were. And those upper end transactions are really starting to normalize in terms of their valuations, and not too surprisingly, right? Because that's very consistent with what's going on in the public markets right now. And then overall valuations, you can kind of see some of that normalization. Non-SaaS actually surprisingly has continued to grow, so it's gone from 4.4 times last year to 6 times this year. On the SaaS side, it's normalized a little bit, more consistent with kind of pre-pandemic levels. You know, at pre-pandemic in 2019, it was 6.2 times. So far, year to date, the average SaaS multiple is 6.6 times. In terms of number of transactions, this is one trend that we've been talking about for a few months now. You know, it's risen a bit from the lows in February, but it's been pretty consistent in that 120 to 130 deals a month. So we expect that to kind of continue at that volume. We don't really expect many months at the 180, 190 that we saw last year. So we'll keep an eye on this, but this is a good indicator of like how healthy the M&A market is. And really what's happened is it's normalized to pre-pandemic levels at this point. On the VC side of stuff, $8.2 billion invested in May, 451 transactions and an average deal size of $5 million. So very consistent there in terms of the monthly kind of stats. Some very large transactions again. You know, Velocity raising $400 million, Spot On raising $300 million. So several transactions that are several $100 million each from well-known VCs. And what does that mean in terms of where we're headed for the general market? Well, if you analyze so far on the dollar volume, we would be at a slight premium to last year's numbers. I would think this normalizes a little bit. We're seeing a little bit less activity on the VC side of things recently, so I would expect that to maybe come in under 2021's level. And then you can see flat on kind of year-over-year deals, which is kind of to be expected, but I would think, again, maybe this will be down by the time we finish the year. And then on valuations, lastly, you can kind of see here, you know, early stage valuations are still down pretty significantly from last year, where they've fallen from 33 times to about 25 times. At the moment, mid and late stage valuations are still up year over year. I would expect that to definitely come down as we progress here through 2022, but we'll be keeping an eye on this. If you have any questions, feel free to reach out to us and we can give you more details on any of the stuff that I've shared here today, and happy to help in any way we can. Thanks, and see you next month.